Hey guys, welcome back. Now, things are really starting to heat up in the crypto market, and it looks like we're all getting blessed with a Santa rally. Even though in Asia last night we saw too many people get caught out playing with leverage and betting on a move higher and getting liquidated, causing the big sudden drop last night. And so even including this, Bitcoin is still up 14% so far in December alone, and many of the altcoins are going crazy. Cardano is up 50%, Avalanche is up 70%, and the latest meme coin Bonk is up over 200%, and this is just in the last 2 weeks. Now, it's that time of the month again where the team at Ark Invest have done their latest analysis and insights on the crypto market for the month. And so in this video, as always, I'll be covering my biggest takeaways, including their key price levels in crypto, which the team are keeping a keen eye on, then some very interesting data on who is doing the buying and selling in crypto, which is causing the big pops and drops. And then we'll finish with Ark's view on the bigger macro economy right now and when they think the Fed is going to pivot. Okay, so first up, starting with Bitcoin and crypto and the key price levels that have just been breached. Okay, so I've pulled out 3 of the best charts when it comes to crypto and 3 of the best charts when it comes to the macro picture right now. And this is the first one for crypto, and these are the prices that Ark Invest keep tracking. We have Bitcoin's 200-week moving average, a new one, an on-chain mean, and then the short-term holder cost basis, which is pretty much the average price that short-term holders got in at. So in black, we have Bitcoin's price, the double top, the big crash we've gone through, and then this recovery year that's just coming to an end right now. And what you'll notice, one of the best ones is this 200-week moving average, because 200 weeks is round about 4 years, which because of the halving, the 4-year cycle is very important in crypto. And one of the things to note is that the price has pretty much stayed above the 200-week moving average for the entire time. However, in this last crypto bear market and crypto winter, it did break below. So arguably, this has been the worst crypto winter so far, as we saw many companies, corporations, lenders go bankrupt. And as of right now, we can see that after this latest jump in price, these key levels of resistance have now been breached. And they were, the 200 week right now is around 28,000. The on-chain mean is around 31,000. And the short-term holders got in at around 31,000. So you can see all 3 are pretty much around the $30,000 mark. And this now flips and becomes major support. So I think the latest move by Bitcoin and crypto has definitely caught a lot of people by surprise. Number 2. And this time we have Bitcoin's percent supply last active by age. So Bitcoin's price, and then we have the last active being 1 year, 2 year, 3 year, and 5 years. And so what can we see? Well, the trend over a longer period of time is that more and more people are hodling. The longer term holders are definitely better at just hodling all the way. And then when it comes to the short term holders of just 1 year, you can see that they are definitely selling and buying. This is a cohort getting caught into the fear and greed of the market. But I think as of this last month and probably the last couple of months, what it shows is that across all the different time frames, people are hodling their Bitcoin. Everybody is pretty much buying and holding on. So we are turning into a hodler market, which obviously locks up the supply. And then number 3, And probably in this entire video, this for me was one of the most interesting charts. Now at first glance, it's a bit of mishmash of different color. However, the green represents the US and the purple represents Asia. So again, we have Bitcoin's price. So this was the big double top that happened in 2021. This was a 50% cut. It rallied back up and doubled again to do this double top before having this big brutal crash, and pretty much the worst crypto winter that we've gone through, and this being the recovery year. Now, one of the first things to point out is that we are all pretty much historically used to the stock market. Now, whether that's the US stock market or UK or whatever country you live in, you pretty much have a set amount of time that the market is open. And then for a large chunk of the day, markets are closed. And we all have to wait until markets reopen. Well, with crypto, this is one of the big things that has changed the game, as the US market will be open and all the activity will be going, and then as you're going to bed, people in Asia then begin to wake up, and crypto, like tennis or ping pong, just gets passed on over to the opposite side of the world, and it just keeps on going, trading 24/7. And knowing that, we can now take a look at the biggest events and see who's been buying and selling. Now, what's really interesting is that you'd think that the US and Asia would be buying the market up and then both panicking on the way down, but this data shows the opposite. So let's start here, and this big run up leading to the high was actually led by Asia. And this first drop here, a lot of the US market had bought the dip. Then when it came to the peak and the first big sell-off, it wasn't both markets that actually did the selling. It was the US that completely capitulated and caused this massive big crash. And then it was the Asia market that were more of the buy the dippers until a certain point, and then they too capitulated, and it was the Asia market that brought the crash to its low. Then when it came to the upside, it was actually the US that was the huge buy the dippers, and they bought this market all the way back up. Way more activity than what was going on in Asia. Then we had this big drop, and then what took us to the second massive peak was actually the Asia market, with the US market barely registering. Then, interestingly, what initially caused this massive big sell-off was the Asian market, and this was one of the biggest capitulation events. And as it crashed and came down, the US narrative was to buy the dip, as definitely in the West, consensus was that Bitcoin and crypto was going to on to 100,000. So these guys in the US certainly got burned as Asia capitulated and brought the market down. Then interestingly, as it bounced back, again the US was buying the dip where Asia was still capitulating. Then at this peak, when both markets had brought it back up, it was the US that caused this next biggest crash, while these guys were about to get totally burned. As they bought the dip, the rest of the Asian market had their second biggest capitulation event, bringing the prices down. This time it's the US market that bought it back up. However, also the US market that caused the big drop as Asia was buying. And then this final capitulation event, both markets, it looked like, had pretty much given up and caused the big flush out. So one of the few times where both markets were thinking the same thing, bringing us to the ultimate bottom. Obviously, in hindsight, this was the best time to buy, and it's this group of people here from the US and Asia that had bought at the very best price. So it's these guys here that we can say in hindsight was the smart money. And it's not many people that absolutely timed it perfectly. Then both markets began buying it back up, led by the US. Small drop predominantly by Asia, but then Asia was the cause of the next buy up. Also Asia selling while the US was buying. And then when we look at most recently what's happened, the biggest cause of this last run up has been Asia and not the US, and only the US starting to get involved here. So this is a really interesting chart, as it shows the markets being open 24/7, and the East and West typically don't do the same thing. Sometimes the big crash is caused by the US market. Sometimes the big crash is caused by the Asian market. Sometimes the big jump is predominantly caused by the US market. Sometimes it's caused by the Asia market. So for me, I found this the most interesting chart of this month. Now onto the macro economy. Three charts again, and this one, Ark are highlighting the gold to oil ratio. And what this shows is that it's a good predictor of a crisis. So you can see the peak here. This happened around the 2008 crisis. There was a drop in the stock markets in 2016, and then obviously the COVID one being the biggest. But it's a very good indicator to spot big things going on in the economy. So when the gold price is going up, while at the same time the oil price is going down, this is basically what it's showing. And Ark were also pointing out that recently this has also been spiking up. And if we just look at from 2015, we can pretty much see it's been oscillating around this range. This being the range high, this being the range low, and as of right now, we're coming back up to the range high. And they said that if this breaks the 30, then it's highlighting a big problem and potential crisis in the economy. So that's the gold to oil ratio. Then they were highlighting the US non-farm work week. You'll notice that Cathie Wood always tracks the non-farm payroll, and this is essentially pretty much what it says. It's the payroll that doesn't include farm workers. So pretty much what it says on the tin, and this one is the actual work week. So how many hours they work in a week. And Ark had been pointing out the average work week has been falling, and also this is a negative sign, as they say that the first thing employers do when things are getting tough is that they reduce people's hours, and that's kind of like the first step before letting people go. So this going down is actually a bearish sign as well. And they pointed out that it's now at levels around the great 2008 financial crisis. But then the other interesting thing that I thought is, because they've tracked this data going all the way back to 1947, we get to see a much bigger picture. And what I also found very interesting is that the average work week has been consistently falling all the way from 1947. We are working less. And then finally, and this chart shows the big Fed pivot that everybody is waiting for. So this is the Fed funds rate, and what the futures market is predicting is going to be happening next year. So after this crazy 20-fold increase in interest rates to where we are right now, just over 5%, the purple line is what the futures thought was going to happen 4 weeks ago. Then with more recent data, what they thought was going to happen 2 weeks ago, and now the latest pricing. So people are thinking that the rates are going to be coming down faster than before due to the falls that's been happening with inflation. Now, quite simply, high interest rates is bad for the economy and bad for growth, and low interest rates is good. And why is that? Well, it all just comes down to borrowing money, or the cost of capital. So if rates are really, really low, then it just means it's very cheap to borrow money. So businesses can borrow money and use that for growth. And individuals can buy properties and improve their lifestyle as well. And things like credit cards and loans become cheap. At the flip side, high rates is acting like a brake on the economy, as obviously businesses and consumers are having to hold back. However, we are soon entering 2024, and this is going to be the year of the Fed pivot and rate cuts. So consensus is that this is going to be starting end of Q1, beginning of Q2, and finally we are going to be seeing interest rates coming back down, and now implied below 4% by the end of the year. So obviously this is great for growth and great for risk assets like stocks and crypto. Things are really starting to heat up in the crypto market, and it appears we're all getting blessed with a Santa rally. Bitcoin has recently blasted through major resistance of the 200-week moving average and also the short-term holder cost basis, and now they've become major levels of support. We saw some really interesting stuff going on with the buying habits of the US versus Asia, which is what's causing the big rallies and crashes. And they also pointed out that unlike the crypto summer of 2021, the macro picture right now doesn't look very strong. And so the bull market next year will likely be unlike any other. However, the good news is that inflation has been coming down dramatically over the past year, and consensus is that we will be getting the Fed pivot, meaning they're going to be cutting rates likely Q1, Q2 next year. So there you are, guys. Hope you enjoyed. Now let me know your biggest insights from this analysis this month below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.